Okay, sorry about that, guys. So let me just repeat what I was saying here. It looks like the microphone was not turned on um, for the live video here. So looking at the S&P 500, we were looking to buy 2482 to 2480, 82 to 80. Long, and the reason we were looking at that level is based on value, right? So what is the market profile, right? What is it? I know I sound like a broken record every now and again, but the market profile is a charting technique for locating value in the market, okay? And it's not based on technicals, it's not based on fundamentals, it is based on statistics, right? Because the type of trading that we're doing, I mean, it might not look very pretty right here in the face of it, and it might look pretty difficult, but what we're doing is we're looking at bell-shaped curves. We're looking at distributions of time and volume. And locating value in the market is important, right? We got to know where we want to buy, where we want to sell. In fact, a lot of these areas of value are created via trading. So there is validity in the areas that we mark. There's valid support and resistance at these levels. Yesterday we had a really fantastic rally to the upside, and we did it on multiple distributions higher, right? We had a D shape, actually it's more of a P altogether, followed by another P, and higher we went. Now when we take a look, we have a value area here between 86 and down here at 80, so about 6 points, right? But we know we don't want to trade areas of value, inside of it, but what we want to do is trade the edges of these areas of value. So the value area low and the value trying to get long, as you can see, where we're going to experience that was the area the most amount of this support and resistance on any trade. Pretty much early in the session, we determined that it's probably in a trend areas, right? So we'll always on a P-shaped distribution on its way higher, probably trades higher. So here we had a value area low, P, and we don't have anything much further. We haven't been at these highs. Find a place to buy it ever in the S&P 500 future. So we figured P up here, 82, that's the place to start getting in. Trending up pattern. As you can tell, the market equals consolidation, close to coming down to those levels, and what we really did was just grind to the upside. So this isn't a trend, right? So we're in it's clearly it is. It's in the idea was to get long at VWAP, but to me it's not a trend because it no range extensions today. So we were trying to get long at TWAP, and this one is shape. Absolutely unlucky. This probably would have been the trade of this right here is a trend. So we were trying to get long right at TWAP, move higher there, consolidate. 48.76 higher exact number at that time. Leg very low of that bar. Here what we had was just a grind to the upside. Okay. Now, interestingly enough, it wasn't until the final hour of the day here, 48.78. All session long, trying to get long. All we saw was two simple contracts at 48.76. We got very unlucky there. Total imbalance of crude. You negative 1,000. Two more ticks on that, but it didn't and then reverse very quickly. It kept fluctuating to make a high of the day of balance 49.40. Now we get towards the end of the day, and luckily, would have been a spectacular trade. Also saw institutional buyers ticks plus come in by the market, but just because of two ticks, so we weren't able to really make. We were fluctuating between negative 1,000 and positive 1,000 oil. While at the same time, the institutional traders were buying the market those new highs. So crude oil, buying the market. It looks like it wants to continue. Look at how these guys do this post-Hurricane Harvey rally, really taking off now. I mean, we traded as low as 45, 80, 46, and now we're all the way at 49. Here, what's the market doing? It's moving lower. Simple days. That's no easy feat, right? What are these guys doing? And it just goes to show the volatility that they're buying. Crude oil continuing to buy. On any given day, we have 100 here. The market starts going higher. What do they start doing? Definitely a lot of opportunity to be had in right. Some start selling, and then the buying. Okay, next up we have begins again as prices. The gold market. This one I feel this is one perfectly executed. A group of institutions or maybe just one institution. Can't really tell for sure, but they're positioning themselves long. Gold. Very was also long. An inside day. We possibly to go ahead. We had a D-shaped distribution. That 2,500 milestone that pretty much we're all talking about now. I'm talking about an inside day, and here you can see here the range during the last half hour of the day, especially during the last couple of minutes of the day. Even right now, the biggest amount of buying and selling. I think that's just mutual funds, and we're still trading in size. So we were looking for the inside day to trade, coming in and buying the market. Before we traded lower, they only come in twice a day. They'll pretty much early in the morning. This was the profile that we saw early this morning. After the D-shaped distribution, or just before inside day, we want to be long just below value, start putting in short just above value. Now, I didn't want to take a short because this market is super strong right now, so there's no real reason for me to be short. And the same thing, but I didn't want to be long, so I had we've seen this contract sitting here at 40 just straight 39 institutions, and I think I made a mistake with this one. I should have gone 41 pattern earlier this year in gold, 40 to 39. And look at gold. Now I think I just when I was drawing this 1300 and green bar, I think higher and higher. I don't know. It was early this morning, so no trade here. Probably half asleep and long. But interesting, I put it in the wrong spot, so I missed an opportunity to get long at that area. Go higher. After the market came down into it, here we can see a position since yesterday. 40 to 41 would have gotten me long right on that tail. Traded as high by the end of this 46. Could have gotten even on just one contract. One last thing I want to mention: 50 ticks. Take a look at this. Really turns out to be about 500. So it's dollars. Positive 12,000 on just one contract. On just one contract. But since we missed that one, I decided to cancel 12,582 those trades there. I figured, you know what? You're telling me we come back to this low, positive imbalance that going to trade lower today is probably going to go into this value area here. Institutional trade. Switching back over to profile, something is up here, right? We got a value area. Everybody and the grandmother, the low of the day here. The one to infinity contract traders. The low of the day just happens to be we're mostly coincidentally this value area also happens to be right there. So. So I took it with a grain of salt, and when we are decided to get long between 38 and 36, as you can see, that happens to be definitely should retest that 2,500 higher from there. I want to see what the by the time I took the trade, it was already like 115. This market closes at around like more buying, and it's not that it closes, but it settles at 130, meaning that anything after 130 is post settlement trading, and during post settlement trading, there's usually a very usually how low type of trading and volume when it breaks these milestones dies out. So I knew the risk I was taking here, so looking at the distribution, I probably wouldn't get much out of the trade. I did manage to get at least just 1 point. I had 3 points on 4 contracts. So I got 2 contracts long at 38 and then 2 contracts short at 37. All the way up here. Traded as high after my was not an inside day 40-60. My average I believe was right there, that 37 letters at 50 prices, and it traded as high period. Y period 60, so there you go. There's the 3 points I talked about. 630, but I didn't take it off at that high. I actually took it off for 1 point. You know, that's still not considered part of our strategy. I was looking for a target still the overnight here in the 43 to 45 area, 8 a.m. mark. But on this bar, X period that we get to the bar, 1:30 to 2 early pre-market. This bar right here. We see this big tail, but this tail was a lot longer. I mean, we traded all the way up there and then traded above pretty much to make this bar into a doji. So I'm like, you know what? It's a big selling tail. I don't want to be part of it, so I took one. We got a value area low here. I took 1 point out of the trade on 4 contracts. Comes out to $400. So not a bad trade at all. Could have been a lot more. Wish it had been a lot more, but I'll take whatever I can get. I'll definitely want to take a look. A profit is a profit, and that was the trade here. What came out of there, but as you can see, you know, positive reaction here after the market profile. I don't just draw lines. I use values based on market profile, and this one was a value area low. Lo and behold, happens to be the low of the day. Up here, we were looking to short. We had a value area low here, value area low, and it happens to be around. And finally, we got the 30-year bond, and this one, I had an order here. I canceled. Caught my eye at least, just simply because the market more than trading sideways or 30 times this year. You know what? I don't want to be surprised later if Crude Oil sell off or probably likes to break above these whole numbers. Me and the 30-year, we have this weird relationship, right? 47. Sometimes I'm right on the trade to trade above these areas, but most of the time runs an extra 20 to 30 ticks before it pulls back and retests. If I don't get in early on a trade, I don't want to get in at all. My marker here is D-shaped distribution here, a chart of crude oil. For most of the session, breaks above 49. What I'm saying, remember, D-shaped distribution is a from there consolidation pattern. So 20 to 30 ticks higher. You know, it might be hard to recognize for those of you who are new to market profile. Doesn't but bounce, bringing it back to something more familiar like candlesticks. Likely consolidation. What is consolidation? It's just the market trade. It's just a pattern I've seen. Right. So look at the candlesticks. Cross above 49. See how they're trading sideways? 47, 44, 45. So that's a D-shaped distribution. And then a B-shaped distribution is a trading down pattern. 49.50. And here's your trending down pattern. We're usually going to see this kind of consolidation here. A little bit of volume. 20 to 30 ticks higher distribution now. Pull back to that whole number. Software for Ninja Trader, either bounce and trade so wonderful. You might not have to guess any longer as to what sure thing. The one thing all you can do is sure that's always happening is it trades 20 with a click of a mouse. So that was pretty much decipher and take a look at the distribution shapes necessarily. Right, we have based on value, even though there is a value area high here. Very nice and simple trending down. It's based on the idea that if it can cross above 49, or probably not looking to get long on a trending down pattern before this would have been the place to get long, but once again, anywhere from 20 to 30 not really profit, maybe more if it doesn't hold 49. It was too late in the day. I mean, but we had 1 o'clock is when the market got down to these levels, and I said, it's too late. This market's closest to 2 hours. It's not going to bounce back from their support at this area. Also, I mean, value here. They've been selling it all day long. Traders didn't just create value. Mostly been profit takers. On this day, we traded a lot lower, but institutions were buying or resistance at that area. They were buying like prices right down here. This was the holidays, so we're going to skip this day. Not a lot of thing over here because it's below on that day. And then on this day, as the market was trading higher, these guys were selling, which means so looking at whoever got long here very profit taking and continued the profit taking today. So you can see we consolidated. That happened to fail. Tons and tons of institutions selling. You know, even if it's selling to close, it's still selling. 49.20 to 30. And if you sell something, the price of the asset should fall down. Very tight range. Another reason as trading why here we didn't want to take this long, especially that late in the day. Positive. So far, really that negative 15,000 balance clear direction in this market. I don't think it's fresh selling. I think it's profit taking. Numbers here, but because profit taking is the same thing as selling, it's not really the time to get long at the moment. The institutions are taking their profits. And they're selling. Okay, next up, why should you be buying? I think the market realized that and finally. And gold, this is an interesting one. This is the second day. So that's all the time I have for today. Those were we pick out a level overnight for the day that we think is going to have support and resistance. What I'd like to do now is, for those of you who are watching this for the first time, I'd like to invite you guys to the website www. Take a look early in the morning. Take a 14-day free trial. That area was tested in the overnight session. You'll watch me trade live every single day for those example. Yesterday was 2 weeks. Really looking to buy. You'll watch me trade live every single one of these markets plus other markets. Initially, we were looking to buy. I don't just trade these 4. 36 I trade 38. The S&P. I trade Crude. I trade the Euro. I trade 4 points or so before the market reversed. The Nasdaq, sometimes even the Russell. And many other contracts. But because it was traded in the overnight session, we weren't really looking to get in at you'll also watch me manage these trades live real time to buy 28 to 29 you'll watch me yesterday, and I left pretty much I'll teach and you'll also watch me use the indicators and 28 to in order to find these areas of value where I want to get long tested overnight, and I'll also teach you the strategies that we use based on market quite a bit of a rally day. So definitely swing by most of the time the market here in the 30. It's free, 14 days. See if this is something that mostly sideways before you started moving higher. We can see here. Other than that, if you guys like this video on Facebook, make sure you guys click like, and if you want to comment or have something to say, definitely back higher in the comment box below. So no trade on this one. Has also great rest of your day because this one was executed overnight. Thanks, guys. Or I mean, tested overnight. I'm not looking to execute a trade at that level, you know, one more time. But here you can see, I mean, again, these are all areas based on value. Right here. Look at the reaction to prices, trades higher. And even here, reaction to prices is to trade higher. So this is, it's a really great way of trading. It's a very patient way of trading because, when prices were up here, we weren't really thinking about buying as the market is moving lower. That's one of the things a lot of traders do, is they like to buy as markets go higher and they like to sell as markets go lower. I'm very opposite minded, but I'm smart about it, right? I like to buy as the markets go lower, and I like to sell as the markets go higher. So it goes with the old adage, right? And the old timers knew how to trade. And it was buy low and sell high. So what I'm trying to do is buy low and sell high, right? Get long as the market is moving lower, because that's creating a new low. Buy low and sell high. Okay, here, these areas of value, I knew there's going to be some sort of reaction or support. The trade worked out pretty well there. And then finally, looking at the 30-year, this one, the one level I did erase, but if you take a look at yesterday's video, you'll see I'm not lying here. We were looking for to get long, actually not right there. We were looking to get long the market between 15, I think, to 19. 15 to 19 yesterday. 155.15 to 155.19, or somewhere in that area. I don't know, for some reason 19 sounds familiar, but this was the area we were looking to buy yesterday. Of course, the market didn't quite trade down to us, so we didn't have a trade. But it was an untested level of support, and look at what happened here, right? In the overnight session for today, we traded down to that level, and we had some kind of a reaction to it, and that's all I'm showing you guys, right? The market profile, once again, is a charting technique to locate value in the market. And value is where you find support and resistance. We're always going to find some kind of reaction in the opposite direction of the trend at these areas of value. Okay. And here we can see we traded higher, and that creates opportunity. You don't always have to be a home run trader like me, but this created a good opportunity for at least 10 ticks. Of course, that was in the overnight session, but it just goes to show the reaction to prices at certain levels, and these levels are based on value. Look, for example, today we had a trending down pattern. We figured we want to be buying 155 to 155.04, and this one was a difficult one to get long, but look at the reaction to prices as it entered this zone, right? It found the bottom. Why? Because there's probably some sort of support here. How did I find that support? Using the market profile. Now, this one was tough. I had an order at 155.02 to get long. I ended up canceling the trade because institutional traders were selling pretty hard the closer prices were getting to my position. So I figured, I probably don't want to be long anymore. We also went from negative 2,200 imbalance to negative 5,800. So, there was definitely a big seller at these prices, and I didn't want to be caught in the follow through if the market wanted to continue to trade lower. Ultimately, it didn't. I canceled my order. I didn't lose anything. I also didn't make anything. But the idea is all one and the same. Buy at areas of value, sell at areas of value. That's where true support and resistance lies. Alrighty guys, so that's all the time I have for today. If you guys like this video on Facebook, make sure you guys click like and leave us a comment. We'd like to know what you have to say about the video. Also, I'd like to encourage you guys to come visit the website, www.themarketprofile.com. Claim your 14-day free trial at the live trading room where you'll watch me trade the S&P 500, crude oil, gold, 30-year, and much more other futures contracts. You'll also watch me trade those contracts live, real time, and manage my positions as well. And not only that, but on days where we have a little bit of a slower time trading, we also go over education on market profile and teach on strategies on how do you say interpret the information that we have, because the cumulative tick volume here, the market profile, these are the only indicators I use, right? And these indicators, they provide a lot of information, and how to interpret that information takes practice, and it takes time, right? Nothing in life ever came easy, so if you have the dedication and the drive to learn something new in a trading style like this one, I definitely encourage you guys to swing by, check us out in the room. Again, www.themarketprofile.com. Claim your 14-day free trial, and hope to see you in the room. So with that said, guys, I hope everybody has a great evening, and I will see you guys tomorrow.